Hello options traders. Well, in this video, I guess you could call it a little bit of a follow-on video to the last one that I did called the 90% myth. And my reason is I want to get the same message out about the dangers of naked option selling, but to do it in a little different manner. In the last video, I brought you different facts and figures to show why it's at least the 90% myth is not true and it's not going to get you all kinds of money for nothing. In this video, I want to have the same message, but we're going to do a little case study. And the reason I like to do this is because no matter how many times I try to convince, and especially for all of our new traders out there, the dangers of naked option selling, invariably people come to me and they say, yeah, but I found this other site that seems to be different. They're making 58% per year over the past several years. They've got a big flashy office in Tampa. The guys wear expensive suits and have expensive fancy cars. They know the secrets. And for X number of dollars per month, I can get in on this elite group. What do you think? Well, my answer is always the same. That's called a matter of time. They've just gotten lucky. Yes, that's what it is just luck. They have hit on a strategy that seems to be conducive to the current environment. Remember, selling naked options is not a difficult strategy conceptually. Lots of people know it, and lots of people use it, usually with the same outcomes. The reason that this appeals to, at least I believe, for a lot of these firms, is that they're really marketing firms. They're not financial professionals. And so it's simple enough for them to understand. They can spin a very convincing story about it and to show you why you need to park your money with them. So let's take a look at a case study here about a Tampa-based firm, happened just last year, called, of all things, OptionsSellers.com. And I'll show you what they, well, didn't know. So first of all, remember the idea behind option selling, or at least naked option selling. The one that usually lures people in is this belief that 90% of options expiring worthless. But as I showed, that is a myth. But still, it's a statistic that a lot of these firms are going to throw out there. Now, while it is true that the 90% rule is a myth, there is a high probability for out-of-the-money options to expire worthless. Well, that shouldn't come as a surprise. It's the same for the option buyer. You buy an out-of-the-money call or a put, good chance it's going to expire worthless, which means it is now a gain for the seller. But if you are the option seller, you have small, limited gains in exchange for unlimited risk. So for example, if you sell a naked put, this is what your profit and loss diagram looks like. And notice you can only make a small fixed amount right here. That's the amount of the credit that you bring in from the sale. That's it. That's the maximum gain. But take a look over here on the left-hand side. Unlimited amount of potential risk. And because you have to sell naked options on margin, that risk is actually amplified. One of the things that I always find super interesting about people who tout the benefits of naked puts will say, oh, it's because you've got positive theta and you've got a super high chance of the option expiring worthless. But that completely misses the point. They don't realize the skewness between the small reward versus the potentially unlimited risk. And the reason I find that interesting is that if you teach these same people, let's say a vertical spread, this is what your profit and loss diagram looks like. Notice we've gotten completely rid of that unlimited downside. And maybe here's one where you could pay 3 to make 2. And they'll say, I don't like that because you're spending more or risking more than what you can make. In other words, I have to spend 3 to make 2. It makes no sense. Well, they're completely seeing things in the wrong way. For some reason, they just like the idea of collecting a small fixed amount up front in exchange for holding completely unlimited risk, all because somebody tells them that they have a high probability of getting it. But you have to always ask, what if? Now, if you sell naked calls, it's the same idea, just in the opposite direction. Your P&L diagram looks like this. Here, again, you can make a small fixed amount. That's the amount that you bring in. But in exchange, you've got an unlimited potential upside. Because stocks have no theoretical upper limit, they do to the downside. I mean, a stock can only go to 0, so puts can only hurt you so badly. But the naked calls are truly a different story. There's just no telling How much damage can happen there? Of course, we can combine them. We could sell the call and the put if we use out-of-the-money strikes. That's called a strangle. So for instance, let's say that the stock is 100. We might decide to sell the 90 put and the 110 call. And this would be our P&L diagram. We can see that we get the bends right here, 90 and 110. Those are the strikes. But take a look. If the stock is right here at 100, look how wide of a range that is for that stock to move and still give us some type of profit. In this example, I have it, you can see right here that we have the maximum gain of 10. So we basically collected about $5 from the call and from the put. So that's $10 in our bank account, which means that I can now afford to have that stock price rise up to 120 and just break even. And to the downside, I can have it fall to 80 and just break even. So that's a really wide range of stock prices, 80 to 120, and I can at least get some type of a gain. See, that's the appeal to it. But what they don't realize is, what if for some reason the underlying spikes up or down? And that's what they seem to never show. So let's go take a look at a series of PDF letters and booklets that I received from a client. I'm going to block out the name, but it's an interesting case study in option selling. So let's go take a look. So we start off with a, get this, private invitation letter, always making it sound like you're part of an elite group. And so, opening line, congratulations on completing your option selling solution booklet series. Having received all your information, goes on and on, you could qualify. You're not guaranteed, but you could qualify to enlist our services on your behalf. See, it's always this idea of, we're not sure we can get you into this elite group. It's kind of like Bernie Madoff. You had to be invited. And even if you knew people, you were just never guaranteed. That's all part of the sales pitch. Then he shows to familiarize yourself with Mr. Cordier. James Cordier is one of the founders, along with this person down here, Michael Gross. How he manages portfolios, you'll find a free enclosed video DVD. So, private seminar for high net worth investors. Everything just sounds like it's just, too good to be true. Then we go on down to another solicitation. Notice OptionsSellers.com to raise the minimum account deposit to $500,000. So they're putting pressure on you, saying if you are acting under the current rules, we don't need this much, but pretty soon you're going to get shut out. It's to create the sense of urgency. What's the urgency? Look at this. 58.42% year-on-year returns. I mean, who wouldn't want that? But it gets better. Completely uncorrelated avenue of wealth growing cash flow. Uncorrelated means, as it says right here, good times or bad times. In the financial industry, this is what we call an all-weather portfolio, meaning that whether it's bull market or bear market or just going sideways, you're going to be fine. It's not correlated with this. It has nothing to do with what the market's doing, right? It's just a free strategy, all kinds of free money. And then down here, this being the case, option sellers must place further limitations on the number of investors, again, to create that sense of urgency. So that's why they were going to raise the minimum account level here to $500K. Call our offices immediately. Accounts are limited. They always know the right buttons to push. So then, after you get through your welcome letter, you come down here, and here are the top 3 strategies for your, get this, all-weather income stream. Lots of money falling from the sky, OptionsSellers.com. Now, these are some other red flags to me. They all use them. You're always going to see an article or something that'll say the truth about whatever it is they're trying to sell. And I always find this to be just almost a sense of arrogance to it. In other words, nobody else could possibly know anything about option strategies. Here's the truth about them. We're going to tell you what nobody else knows, because only we know. And then they say, oh, here's strategy 1, 2, and 3. They tell you these are the only 3 strategies you'll ever need to build a high-yielding option writing portfolio. This is it. Out of all the option strategies out there, these are the 3. Nothing else matters. You know why? Because they don't even know them. So they're just going to convince you that this is it. So we come down to here. We see the initial premise here. According to Vince Lombardi, you got to perfect the basics, which obviously these guys have perfected the basics, right? They're making 58% per year. And they show you all you need to be successful, and they keep going on. Strategy number 1, selling naked puts or calls. So notice the language here. They're going to say that you have selling deep out of the money strikes. They emphasize that. In other words, you've got no chance of having this option go in the money. They want to emphasize that. Then they're showing the, one time that it might have worked on a commodity. Then they show you the strangle. That's the one I showed you where you're selling the call and the put. Double your premium, balance your risk. Put is sold far below emphasized, and the call is sold far above the current stock price. And you're going to profit anywhere between the two strikes. I've talked about this myth before in a previous video. There's another risk measure called normalized vega, which actually shows the really severe risk that can happen if these options should undergo a big spike in volatility, even if the stock price doesn't move. And the further out of the money you go, the bigger the risk gets. But they don't bother to explain that. They just make it sound like this is a great thing. There's always a trade-off, and they're completely dodging it. But normalized vega could make whatever risk they're exposing themselves to 10 or 12 times higher. So it's kind of interesting that they leave that out. Wider range of movement, everything just looks like it's just perfect. What could possibly go wrong? Well, let's take a look. Then we come down here to another little letter here. Clients of Tampa firm that lost all their money in, quote, catastrophic trade seek $9.5 million. Major brokerage being sued. Tampa's OptionsSellers.com. Look at this. 300 clients included Tampa Bay Lightning owner Jeff Vinnick, who himself is a supposed money manager. He got roped into it. Now, I apologize for the quality of this, but it's obviously a photocopy. But you can go to YouTube and just type OptionsSellers James Cordier full apology video, and it's still on there. But what's interesting is it makes it sound like, apologized in an emotional video, that it was just some type of a catastrophic event. In other words, how could I have possibly seen this coming? That's my whole point. Your strategy works good until it doesn't. But they don't understand that. And then they suddenly just throw up their hands and say, well, it wasn't my fault. It was a catastrophic event. Who could have seen it? So this is why I always tell people to avoid the strategy and anybody who's trying to sell you on it. Now also take a look down here. Lawsuit alleges FC Stone, that's the clearing firm, promising high returns and fastidious risk management. Down here, Cordier notified clients of his losses in an email titled Catastrophic Loss Event. Boy, if that doesn't sound like a good marketing type of phrase right there. A catastrophic loss event. No, we're not going to say we blew out your account. It was a catastrophic loss event. How bad was it? Well, here's a guy down here, 79-year-old investor in Fort Myers, lost $1.8 million, but get this, still owes FC Stone $571,000. In other words, he's got to send in a check for $571,000 just to get his account to zero. How does that happen? Because you're on margin. Another investor from the Tampa area lost $450,000 and still owes $125,000. None of the investors realized they could wake up one day to discover that they had not only lost all the money in their accounts, but also owe money to FC Stone. The saddest part about this whole mess is that it could have been avoided if FC Stone had just done its job. In other words, if they had shut some of these clients down before the risks got too big. But they didn't. So now, not only are people, facing losing all their money, they're losing that and then some that they might not even have. So this is why I always tell traders to be careful when you hear about these firms. They're marketing firms. Again, they're not financial professionals. So even though they promised the sky and 58% returns year over year, and we've got Jeff Vinnick as part of our clients, we've got this huge office in Tampa. If you go to their website today, this is what you're going to see. So you can see right here, OptionsSellers.com. This is it. Contact information for the lawsuit. You are left hanging high and dry. Yeah, you got an apology video on YouTube, and that was it. So this is why I tell traders over and over again, when you see these firms with the big flashy sales ads, the sense of urgency, we're the best, we don't lose money, we've got a big fancy office, we've got high profile clients, don't fall for it. It doesn't change the fact that the market knows about these risks and they're all priced into the contracts. So again, for all the new traders out there, you can pick and choose your strategies, but please avoid the naked options. For those who'd like to learn more about the art and science of options trading, please check out the Alpha Trader course and strategy lab at OptionsA2Z.com. Also, please join us on the Facebook trading group Options A to Z, and you can find a link in the description below.